Hello and welcome, as today is Tuesday, the 28th day of November 2017. My name is Derek. This is a gold chart video. We'll take a look at multiple time frames within the gold market. And we're looking at the daily time frame to start this video. And within such, we see a situation where earlier in the month of July, the market had a low-end price point at the 1200 area. Then earlier this fall in September, or at the end of summer, it has a nice move well into the 1300s. So as it stands now, it's close to 13. It had a price correction down. Markets correct either through price or through time. It had first the price correction. Now it's been going sideways. A level of resistance, which was nicely established in here. And it came close to this previous low at the end of October, but it never took it out. It has been in the sideways manner for, well, the rest of this duration. Now, interesting, if we look at a candle by candle basis, and I want to talk about this and the red one that follows afterwards. The green candle higher, which broke the short-term level of resistance, but it broke it not by much, but it's a statement that, okay, let's attempt to revert this trend and make it up to previous high. At least the first one in there. And when you see just those two periods together, the big green candle up, which is followed by a matching red candle down. I have seen this on internet articles. I'm sure I could look in the one textbook that I have about this, and they will talk about this as a bearish situation. And there's probably a name for it, but because I'm pretty much 99% self-taught, as well as from Brian Shannon as well. That's a lot of the key names I am not familiar with, but what I'm looking at, I am. So this, generally speaking, is very bearish. And when you see such, right after it, you would expect further price decline and a pattern of lower highs and lower lows. So after the red moved down, maybe a little bit of rally would come in, make a lower high maybe somewhere around here, but ultimately break down and test the July lows is what you would expect. But it didn't do that. No. It's instead bringing up a nice, very bullish setup, because now I am looking at about 3 or 4 periods where it's riding the 18 average of highs that is newly rising. I can see a large gap empty, or an empty space between the 18 average of lows and price action, or the lowest points over the last few days. So it's holding and staying above short-term levels. It's holding and the second chance rally, because after the red candle down from right before the 20th, then it just got it back again. This time it's holding that point. So it does look as if this thing is ready to have a break higher, or continuation, test some of these levels. I think it would get past this resistance level, maybe test upwards to this previous high, but somewhere in the middle is an area I expect for resistance to come. I think there's a good chance that this breaks out. Of course, everything you do is within your own risk, own reward. I can tell you what I've done, and I purchased 9 grams of physical gold. I did so from the Chinese panda coins, 3 grams multiply 3 coins, costing me not US dollars, yeah, technically Canadian dollars, but my bill, or my payment, was done so in Bitcoin, 0.048. And I don't have much gold, and I still don't have much gold. I have under 1 ounce of gold still, and I have hundreds of ounces of silver. But as far as portfolio diversification, and they're nice little coins, just something to have as well. And again, I think gold's a good commodity, good coin to have as we're moving forward. Let's now move this on to a weekly chart. And within such, let's take a look at some simple technical analysis the way I look at it. Of course, we got the big high and big low again. It had about a 61.8% price correction down to about here. And it got about the 1240 mark, I think it was, from around here. Is the 61.8% level. And it's holding and staying above it. I can see resistance was big exactly where price action is now. That green line, because it's resisted here. It resisted here. It broke out here. And it gave all of it back and supported deep within previous resistance, meaning it didn't support here, it supported here. However, the statement was made a long time ago, back in August. The statement was that this thing is most likely going to break this high. It didn't touch it. It kind of tested it in here, but when I see a pattern like this, break this key 61 fib level, have a noticeable break, and then have a successful correction after that move, after that statement, that any price action getting above this 18 average is an indicator that it is most likely going to break this high, and you're going to have to look at a longer term time frame to see what's up with that. What does it look like further within? How far can it go? Well, let's take a look next. We're looking at the weekly, so the next stage is to look at the monthly. And this is a long sideways consolidation from the last topping high in the year 2011, 2012. 2011 really, but you know what, this counts too. It had this area and 18 average gets violated, uptrend lines get violated, one leg lower, and over a half a decade of going sideways. There was a clear downtrend support line. There is a clear uptrend support line right now. Now, which the line is, that might not be the exact clear, but it's definitely in an uptrend, short term. How about resistance? Is there a clear resistance uptrend line? Well, I guess you could say here, but I'm looking more long term than that. No, it's a straight line. A little higher than where the green line is. Roughly around here. So you can say just in a little bit, it's an ascending triangle. It's a V shape, and I don't know what name this pattern would look like. But when you see a break above here and price action firmly above the 1400 handle, well, that's a pretty darn near bullish sentiment statement here. Short term, it looks like it's going higher. So yeah, up to this line is where it seems it's going to go. So price objective short term, I think, is 1400. And I do like the odds mathematically from this point of view that it should break above it, and then filling the parlays even further if it does break it, or when it breaks it. It should look like a spectacular time to go long and at least expect a move up to previous high. And I'm going to expand this chart even further and talk about the move to previous high. But that's how I'm looking at the message of the market. Everything you do, of course, within your own risk and own reward. Of course, I've told you what I've done. I've bought in just a small amount, three gram coins. And let's take a look at this on a 2-month chart next. And we're looking at a situation of a key low. 252 is the low. 1920 is the high. These are in my head. I didn't look those numbers up. This is all the data that I have from TradingView. I have access to other data and a spreadsheet. I will be presenting at the end of the year or start of early 2018 some more longer term charts, like the maybe 4-month or mainly the yearly chart. But this does lack data. going back to 1968. So I'll probably add two charts, one from 68, which would most likely be in the 3-month format or the 4-month format, and one from 1913-ish area, when the earliest data that I got, and that'll be in the yearly time frame. But within just this data, which is really the most important part of it, we know the price action was back in the day, at least if you didn't know, I'm going to tell you now, that back in 1980, the price action got up to $850. Retracing down to 252, and then when the millennium started, for well over 10 years, or a little over 10 years rather, 250 to about 2,000. That's about a 9x gain. Not bad. Of course, in relevance to cryptocurrency gains, it's decent. But what I really like in technical analysis is a situation in which it only gives back about 23.6%. A 38.2% down correction from this low and this high should give us a mark down to 750. But I don't need to see that for technical analysis because support has been established in this area. There was one break of that support on the lows at the end of 2015. These numbers did break below here. It was a clear break. Failed move, but if it's a fast move, it's a very much delayed fast move. I guess short term is a short-term fast move, yes. But a clear level of support. So if that level of support gives in, I expect significant leg lower. And just around this area here would be, well, the approximate area, if that happens. That's the if support breaks. If resistance breaks and there's this clear uptrend line, it's got very good short-term momentum. The resistance level we're playing in with now is very much established. It goes even back to the start of this sideways correction in here as well. So 1400 is a very big level. And on the break of 1400, you can almost say wowzers. The first thing I want to point out, you see the clear number above, price action in at 1430. You see it holding and staying above 1380-ish or so for a week or more. Even 2 weeks or more, rather. Then there's a good reason to note that there's going to be price action most likely moving to this high. One of the things I'm a really big fan of is selling things that I own, and I'm mainly talking about cryptocurrencies in this case. When a market has a good price correction, I'm able to buy on the low, which is usually easy to do when it has such, and then unload or sell a good percentage, up to 100% of that is, right before that high. So if I know the high is 1920, I would put a sell order in for 1899, but, if you have a situation where you have a very good move, this was a very, very good move on the rating scale. The big thing is not the move, but how it handles when that is done within its correctionary phase. So mathematically, if it only gives back 23.6% of its gains and it doesn't even do the 38.2, I become very reluctant to think that this sell area is going to be that good. Meaning, if price action does go up here, and I think that if, again, you see it at like 1450, 15, all these numbers barely above 14, that it's going to go there. But, I love that word, but. What is the expected, how it's going to play, how the story is going to go? I think if you are lucky, maybe you might come back and get 15 or 1400. And I really think you might be lucky to get 1400. You really would be lucky. I don't know how well of a sell point this would be because there's a pretty darn near good chance this thing will just roll sideways maybe within this range and even hold something like 1600. Thus, if you're selling at 1900, all you're getting back is a small deal. And if you're selling physical bullion, you have to be pretty good at selling in order to ensure that you can handle profiting on a sell at 1900 and a buy at 1600. And it's just limited profitability. I have seen oftentimes in cryptocurrencies and other stock charts through the past decade where when it doesn't have that big of a price correction, and the time correction, although less important, isn't that long, and here it's just starting to become long, at least on the 2-month time frame it is, that when it does make a move up here, I have seen many cases where it just keeps going and going and going. And in those situations when that happens, when you have a good level, have a good correction, and on the break of such, you're going to usually have good further gains. The gold history had a low, again, of 250 going up to 1900 from 2000 to 2011. Well, now if we look at the start of the 70s to the end of 1979 into 1980, that's when gold went from $35 to like $800. At this stage of this correction, we're talking from 1,000. Although technically a bit over it, but that's the last key low from where it would come from. I think 5,000 is a conservative level on the break. Conservative on this long-term move. Okay, I'm going to be concluding this video. I can see it's already getting quite long, but that was really the plan. I don't talk about much about these gold markets. And really, unless this thing gets exciting, there will be no need to do so. So what defines this as exciting? Well, we got this nice little pattern. If it does have this break in towards the 1500, then it becomes such. And then if the downside movements come in, then there isn't even really no need for me to come in and even say, okay guys, little warning sign, gold is down here after showing a good strong sign, because I'm really letting you know this now. And price action, if it does such, I don't think it will, but if it does do it, then you could don't be surprised if there's furthermore down move to 750, 800. Again, I don't think that's going to happen. I wouldn't have bought 9 grams yesterday if I thought that was going to take place, especially because I'm very bullish on cryptocurrencies. And the ratio of such, well, we have gold prices around 1,300. And we have Bitcoin prices at about 10,000. So it's like, what, around 7? Earlier this year, when the unmoving, for the most part, gold prices were around 13 or 1,400. Bitcoin was around 13 and 14 or whatever those numbers were at. And that was much, much higher. And then back in the day when Bitcoin was $250 and gold was still over 1,000, you needed a few Bitcoins to get an ounce of gold. And now you get a few ounces of gold for 1 Bitcoin. Myself, I got 9 divided by 31.1 ounces of gold for 0.048 Bitcoins. Oh, I love fractional math. Thank you for tuning in. And have yourself a great day. Bye-bye.